At the moment, we're in phase 3 of a typical sell-off. So what does that mean? Phase 1, there's a shock. The market panics. Everything gets sold. Selling is indiscriminate. And that's what we had. And the crisis this time was a health crisis. The second phase of any sell-off and recovery is the snapback. The market goes, yes, you know what? We've oversold. We've panicked. There's lots of bargains here. Let's buy some things. And the market roars back. But there's still uncertainty. The third phase, and this is where I think we are now, is reality. So reality is companies have a grip on their earnings. They're giving guidance, getting more of a grip. Poor economic data is coming through. Eventually, that'll start to slow down and you'll start getting signs of a rebasing. So we're in this rebasing phase, trying to work out what's the starting point. You know, when does the trough come in economic terms and in earnings terms? We think as we get through June, that will definitely be the rebasing point. And as we progress from there globally, we'll start getting better news on the economy and better news on earnings. And that's the fourth phase that happens then. The fourth phase is a genuine, steady recovery off a much lower base. And the base is low because COVID has basically stopped, developed market economy, recovery off that lower base and more of a normalised, steady recovery. We do like the miners, and they've got the benefit of a much lower diesel price, a lower Aussie dollar. It's recovered from where it was, but it's still lower than what it was at the beginning of the year. And when you think about it, miners selling iron ore, for example, they get revenue in US dollars, but their costs are in Australian dollars. Perfect. The prices of iron ore are strong. The energy companies are under the pump, admittedly, but really it's the iron ore companies that are driving the export market for the most part. So miners, healthcare, ResMed it's a world leader in respiratory care, in sleep apnea treatment and in ventilators. So they've pivoted to an extent from the sleep apnea machines to the ventilators, where they actually make less money or less of a margin than the sleep apnea machines, but they're still making good coin. They're still making good money. And that's why, the ResMed share price has barely missed a beat. CSL, we've loved for a long time, and need I say more, largest company on the Australian market, and rightfully so, I think, and they're in the thick of it in terms of developing a vaccine. Although they said, we're helping to develop a vaccine, providing resources, but that's not for profit. They're doing that to help the world. So healthcare and the miners and technology. Now technology in Australia, it's a bit of a niche sector, doing particular things, buy now, pay later, etc. When we say we like technology, really it's the big global companies that we're focusing on. So I'll give you an anecdote. When this work from home thing started back in end of Feb, beginning of March, my wife was trying to download Microsoft Windows 10 off the Microsoft website, and it kept crashing because so many people were trying to download Microsoft software because they needed it for their home office that we couldn't do it for some time. We had to log on at like 11 o'clock at night to download it. So there's an example. Microsoft, you need the software for your home office. You need the cloud computing to hold your data, and you need Outlook for your communications from your home office. So how perfect's that? So Australia has a reasonable sort of technology sector, but not like what the States has. So we do like technology, and we do like, it's not just global, not just Australian healthcare stocks, but global healthcare stocks as well.